Good morning, traders. This is Chris Buss with Traders Profit Compass with a morning look at markets for Wednesday, September 23rd. Okay, I want to do something a little bit different this morning. I want to spend a few minutes on gold and the US dollar. If you'll recall, I did a blog post last week uh, saying, is gold going to be a kingmaker or a heartbreaker? And we were focused on the euro US dollar pair as being a key. Here's our long-term trend line that goes back 10 years. Price had been consolidating. We were looking for either a breakout or a breakdown. And just in the last couple days, this is starting to break down, breaking below this 117.50 level. Pretty decisive break, I would say, as well. So that's showing dollar strength and euro weakness. So yeah, this is breaking down, and that's bearish for the bearish for gold. Here it is on the U.S. dollar. We have this, this is the, everybody piling short on the dollar, and we've had this saucered bottom over the last 2 months. And now you can see we're emerging, taking out that resistance line and closing above the 50. I think that's really important. Another thing that's important is we've got a big price void between this 93.50 and say 96.25. There's a really good chance for a quick power move up to test this level. Not saying it's going to happen, but the door is certainly wide open for that. And a rising dollar is bearish for the commodity complex and the precious metals. But what's also important is the speed at which it happens. This has the potential to be a really fast move, and I don't think the metals are going to like that at all. So when we look at gold, here's the daily chart, and we've shown this the last few days. Up in the RSI had been just chugging along in its bearish, in its bullish regime above 50, and now it's broken below. Here on the momentum, we were looking for a turn up at the zero line. It turned down. So that's bearish if there's follow through. Here we had a nice ascending triangle. We were talking about, should we buy this breakout or not? We said no, we wanted to wait. And in the last couple days, we got a gap down below the 50, below key support at 180. And yesterday, while it wasn't dramatic, we were down 0.5%. The futures this morning are down 0.5%. So this is at a critical spot, and it's actually at a spot where you could do a well-defined short trade. I think we're close enough to this level where if you wanted to take a shot, it's certainly objective, where you would get short against 180 with a stop just above with a target of 171. So you've got, let's say, $9 of downside, $1 to $2 of risk. That works out well. And what I like about the trade is you're into a void here where, and it all works together. Remember the overhead void on the dollar and the void below on gold. This lines up to when the dollar just fell apart and gold rocketed higher. Well, now we've got the same thing in reverse. So if dollar strengthens quickly, I would expect this to make a move down towards this level. And then what I wanted to show you is that's the level that coincides with the weekly uptrend line. So that would be a place at the conclusion of that down move where I would want to step into the long side of gold with a really good anchor here, down around 171 or so against this pivot point and support, and then look for a move back higher. Notice also we've got a trend line violation on RSI, and we've got a high level bear cross working on the weekly. And those can be powerful. That's what we were watching on the equities. Moving on to the miners, pretty much the same idea. I mean, they're going to follow the metal. The PPO has rolled over. RSI dropping below 50 with a trend line violation, and price dropping below this symmetrical triangle. I think it's coming in here to around the 37 range where there is support from that prior high. I think that would be a really nice location to anchor along, of course, depending on what gold does and where it's at the time. You'd like to get both of these, the miners and gold, bottoming out at the same time so you can, sync up your longs, or at least have gold get poised to go higher when the miners are at a base. All right, moving on to the equities quickly. Yesterday we talked about the 3-bar reversal. We got that yesterday. Noticed the downtrend, hammer reversal, and then green bar. That's a 3-bar reversal. That doesn't mean we're going to new highs. It just means that likely the short-term downtrend is over for now. So I wanted to point that out. Here's a 2-hour chart that gives you some granularity on the price action. Still a lot of work to do. We've got a downtrend line off the high. We've got price still below it. Now, the futures are up this morning. I think they were up around 11 handles. We've got 331.18 as the 50 EMA off of the daily chart. So we're right there. If price were to make a move, into the box and take out this downtrend line, then where's your target? Remember, if you break out or down from a well-defined range, and then you come back to that range, the natural target is the other side of the box. So, if you're up here on the top and then you re-entered the trading range, the target would be the bottom of the box. So in this case, price comes up. If it takes out the downtrend line, it will see some resistance here at 335, 336. But if it can get through that, then it's back up towards 341. And then that would be like a monumental place for price to decide what to do, because above 341, you've taken out all this consolidation, and then you really just have the old highs to go after. So it'll be a really interesting few days to see what's going to happen here. But anyways, those are your levels. Keep them in focus today. 30-minute chart, same thing. We filled the gap, and now we've got the 50 at 331.18 to deal with, and then we've got this next level up here to 336. So those are your intermediate levels. Each time price crosses it, is an opportunity for longs that aren't in, that want to get in, to have an objective level to shoot against. And it's also a chance, if you got long at any of these lower levels, to either move up your stops or roll your strikes higher to protect this win on any kind of a reversal. Qs, 3-bar reversal, boom, 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 recaptured the 50 EMA, which is important, and very close to taking out this downtrend line off of the highs. Let's look at it at a 2-hour chart. Here's our trading range boxes. Price is above the downtrend line, so that's bullish. I've penciled in a new uptrend line here. Price spent a lot of time around 275. I think that's your first resistance level. But then above that is 280. And then if 280 were to be taken out, 286, and then back up to the new highs if it gets that far. Now, keep in mind that we've got Fibonacci retracement levels from this high, and they correspond very well with these levels. So as we're going up, we're getting a retracement of the down move that has the potential to reverse at any of these locations. So if we were to get up to 275 today and then price stall and roll over, then all these levels down below become, activated again as targets. So it's really an exercise in going level to level. Do we take it out? If so, look to the next level higher as your target. And if we stall and reverse, look for the next level lower as a target. And that way, you kind of always have an eye on the next level above or below. You don't have to guess on where it may be going. It's already kind of predefined for you. And here's the 30-minute chart. Exactly the same levels to look for, either breakouts or breakdowns. Really, the key on this chart, I think, is 280. If we, just zoom past 280, fill this little gap, pop over, 286, and then go up to 290, I mean, you're basically already back up at the top. So we'll have to see if this is just a little reflexive Fibonacci retracement off of a divergent low, or if that really marked the bottom. We'll have to keep an eye on that. IWM has not had as impulsive a bounce as SPY and QQQ. I think this trade sets up real easy for everyone, so it may be one to take a look at. 150 has been our line forever. Going back here, here, here. That was a whipsaw head fake, but it still respected 150. Here, and now here. So when price comes up, I think you can do one of two things. Either take it long immediately and set your stop below, or wait for price to get in this gap at 150.26 and then get long for a $3 gap fill. Either way is fine. Just keep in mind that if you get long at 150, the lower side of the gap will often act as resistance, and you may get rejected there. But if you are willing to take that chance, get long at 150. For those that say, you know what, I'll give up the 26 cents, I'll wait for price to get in the gap, and then I'll look for that $3 move. I think that's perfectly fine as well. On the other hand, if price comes up here and at any point stalls and reverses, your target is 147.50 again. And if that breaks, back to 145. Those are the levels we've been looking at, and they've been working like champs all along through these areas. So just look at the levels above, and that's your target. Once cleared, move up your stops, and then look up ahead. This is just the same thing on a 30-minute chart. Shows you, the levels, the gap, an intermediate resistance level, and then support here at 146.50. Quickly through FANG, Facebook took a dip into this gap, came back above, little rally up to 255. What really needs to happen for Facebook to get going is a break above this downtrend resistance line at around 57.50 and then clear 260. If it can do those two things, then I think you got a good chance for a move up to 262.50 and then up $10 higher towards this 273 number. So those are your levels there. Like we've been saying on any other stock, if it's going to get rejected, it's going to get rejected right here at this downtrend resistance line. And if you start seeing bearish price action, all around, maybe you can take that short there. I think the bulls have the ball right now, though, so, just take a wait and see. I think probably waiting for this to get taken out on the long side would be a better trade at this juncture, as long as SPY and QQQ have an upward bias, and I think that's the case. Apple, has taken out the wedge, came back to back test it, found support at 109, moved higher. The next key level is 114. If it can get through that, then 118 and then 123. Got a lot of work to do. I don't think it's out of the woods yet, but we have to respect the breakout, respect the price action, and those that want to be long, it's certainly objective against 109. And if you want to wait and see if this level is taken out, then you can get long for 118. It just depends on how you want to particularly play that one. But it is on the upswing. It does have positive price action coming out of these bullish divergences that we had pointed out. So things look good so far. Just be ready for a reversal when if it ever happens. Amazon had a really nice day. I was mentioning in the trading room how well these $50 increments have been working. Yesterday, I said, when this 30.50 was the breakout, then 3100 was the target, and when 3100 went, 3150 was the target. So these $50 increments in Amazon have been working really, really well. And this is the first real test right here, 3151. That's a 38% fib retrace. Maybe a place where it finds a little difficulty. But if not, then 3,200, 3,250. Those are your upside targets for today and the days ahead, if it can power through each of these levels. And for sure, raise your stops each time. Microsoft found support here at 204, 205. Next target 210, then 213, then 218. So those are your levels there to watch against this trend line. Everything still looks bullish. We'll just have to see how long this bounce goes. And you're certainly welcome to play that on the long side if you get a good place to shoot against. You know, if this morning we got a red bar and it came back to 204, I mean, you can hit it there long with a tight stop below and then look for 210. What you're looking for is, you know, a good line to shoot against. And right now it's like 205, 204, and 210. Again, another 3-bar reversal. We talked about Google on the daily chart. Got a nice move, $25 move yesterday. Red, hammer, green. That's your 3-bar reversal that we talked about yesterday. Netflix, grinding from level to level. The next upside target is 495, then 505, then 520. And those would be the logical places where if price ran into a problem where you would see it and you've got a nice uptrend line to shoot against, looking for longs. And if you're biased to the downside, you've just got to wait for a rejection and a trend line break. No evidence of that yet, so just have to keep our eyes peeled. Tesla had its battery day last night and is down, trading right near 400. It had gotten as high as 450 in the after hours, and then I don't know if something was said or if sentiment changed, but they sold it off back down to 400. So here's the deal. If you're a Tesla bull, you got to step in right here at 400, where your lateral support and your long-term trend line intersect. That's your buy point. If you're a Tesla bull and you want to be long, now is the time. With a tight stop below, you've got a rising 50. You'll have to decide, you know, what your risk is. But we are at support. Tesla is at support, dual support. And having two is always better than having one. So you've got two lines of support intersecting with price right there. This is a place, if it's going to hold, it's going to hold right here. And if it doesn't, and you've been some kind of Tesla bear, if it trades back down below 400, your first target is the 50 EMA, $40 lower at 363. And then if something happens and it loses the 50, then you're looking at, 300, 320, 280 down in this area here, because there's not a lot of support until you get down into this zone. So anyhow, if you've been trading Tesla, you know a lot more about it than I do. So use your best judgment. But from a technical standpoint, this is where you buy, with a stop just below. Little follow-up to this SCPL It had broken above 16 yesterday, up about 3%. So now this should not come back below 16. We're long, we're bullish. We don't want to see that. So if it does, that's a signal to exit. So I would be moving up your stops, 1575, whatever risk you want to give it. But from a technical standpoint, it has broken out to new ground. All it has to do is clear this 17 for blue sky. And that's what we're hoping for. Giving this trade plenty of time to work. So, okay. That's it for this morning. Be careful with gold. I'm leaning bearish on that because I'm bullish on the dollar. Keep an eye on that euro-dollar pair. As long as it's falling, it's going to be bearish for gold and precious metals and the precious metal miners and in general commodities. So keep an eye on oil and that kind of stuff, your oil energy names. If we see oil falling, there may be a trade to make there. Otherwise, on the indexes, still have sell signals across the board. We're in an oversold divergent low bounce period. I do think that this ultimately rolls over. I want a position for sell the rip, not piling in long. I'm not afraid to get long on a very short-term basis and ride this higher, intraday and day-to-day on strategic overnights. But I'm not inclined to go piling in, full tilt long into September, October. It's just not something I want to do. I will certainly present setups that if you are a bull and that was the dip to buy and you want to go full force, I will route trades to you that fit that bill. Remember yesterday, I showed McDonald's that is back testing its all-time high breakout. I think that's a great setup. It's not going to be Roku. It's not going to be, Tesla. But it's a beautiful technical setup where you know exactly if you're wrong, if it loses that all-time high breakout. And I believe that level's 215, and it's trading 216. I mean, that's a beautiful long setup. I showed Twitter 2 days ago. Was a beautiful long setup. It did a moonshot yesterday. So there are stocks to trade, and I'll put them out there for you. And I view those as all tactical trades. Get long, take advantage of the setup, but not get married to it. Make some money, get out, and expect more volatility. This is not just going to quiet down, I think, into the election. We're going to have really good up days and we're going to have really bad down days, I believe. I think volatility is here to stay, at least up into the election. So be ready to handle that, mentally and with your positions. So, okay, that about wraps it up. If you like the content, please hit the like button and that bell so you get all my content sent directly to you. Certainly subscribe to the channel and check out the show notes for links to the blog site and all my content, so you'll stay fully informed with what I'm thinking and what I'm seeing in the markets. It would be phenomenal to have you. So for this morning, this has been Chris Buss with Trader's Profit Compass. Have a good day of trading. and talk to you next time.